Good afternoon and welcome to Nasdaq Trade Talks. I'm your host Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the RatesEvolved conference brought to you by Viable Markets, the industry's only global interest rate conference. Helping me kick off coverage, we have David Parker. He's the head of U.S. sales at MTS Markets International and LSE Group. Thank you so much for joining us at RatesEvolved. Now let's talk about understanding fixed income market structure. It's so complex. I would argue out of all the asset classes, one of the most complex. Why is it important to understand the differences within the asset class to truly understand market structure?
Well, it's a massive part of the trading market and the economy, and market structure in the end is what underlies liquidity of the instruments and the cost of doing things like funding the government, funding corporations. So it's a very complicated space with a lot of different moving parts, but again, it's hugely important.
So what challenges are you seeing in the fixed income trading community right now? In the current environment, we have heightened market volatility, rising interest rates, a number of geopolitical factors, as you had mentioned. What are the challenges you're focusing on?
They're the same problems as kind of any industry, cost and reward. So, and then you combine that with the concept in the trading market of liquidity and finding a way to get trades done that need to get done. So, in the electronic trading spaces, which is what a lot of us talk about, we focus on both liquidity discovery, how do we bring together two parties that want to do a trade, and who gets informed about those trades, but then also the cost of doing that trade from a connectivity standpoint, not just commission, but how can we as a group reduce costs for trading and increase liquidity by bringing people together in more efficient ways.
Because fixed income trading is very different than equity trading, if I'm correct. It's a bigger process to actually execute on bond trades, right?
Yeah, almost every fixed income market is over the counter, meaning it's a bilateral trade between party A and party B without necessarily an exchange involved or any central clearinghouse. And so, yeah, that puts up a lot of walls to getting execution smoothly and the information that you need in advance to get the trade done, period, i.e. what would I pay for the trade you want to do? We're having that conversation to each other directly. I'm not necessarily showing everyone that same price.
Mm-hmm. Yeah. Oh, that's interesting. So what trends are you seeing specifically with buy-side fixed income trading, and do you think you're going to continue to see this rise with electronic trading?
Yeah, the buy side is, it's challenged in a couple ways. Passive strategies are becoming much more popular, which is reducing the fees that the buy side are able to bring in for managing money. They also have, obviously, the macro picture of very low interest rates until recently, and now pretty steadily rising rates in the U.S. A lot of government instability, both in Europe and in the U.S. So having to make money in that environment for their investors is challenging. And then they have to keep the lights on and hire the right people, et cetera. So that speaks to the cost side of the equation. They're trying to find more efficient ways to execute trades, do more trading for less with less people. Mm-hmm. Again, that leads to electronic trading in most scenarios. They're also trying to figure out what the markets are going to do, obviously, and where they need to be paying attention in order to position their assets properly.
Well, I mean, think about it. In the past 10 years, we've had historically low interest rates. There's a generation of traders out there that have never been exposed to this kind of volatility or rising interest rates, when in fact, we are still at historically low rates, but they've just never traded through this kind of environment.
Yeah, absolutely. And so much of the market is benchmarked to fixed income returns. And when the overall market is returning 1 or 2%, yet your pension obligation, commits you to 7%, it's very, very difficult to make that work. And again, buy side is being pinched, which leads to innovation. It also leads to consolidation, which we've seen a lot of. And again, conferences like this are partially to help kind of figure out these issues and where we need to build infrastructure to help out our clients.
All right, and to wrap up here, over the next 1 year, 5 years, 10 years, what do you think fixed income market structure looks like on that electronification path? Yeah,
well, the cliche is it's going to look more and more like the equity market. Mm-hmm. I think the biggest thing that we're talking about this year and the trend that's going to be going forward for a few years is more consolidation in the market structure space, i.e. the CMEs, the London Stock Exchange groups of the world are going to continue to get bigger. And B, the increase in automation in the actual execution function. So whether it's buy side or sell side, algos, computers doing the work instead of individuals. Obviously there are individuals behind them, but the actual point of the spear is more and more truly a computer or an algorithm.
All right, thank you so much, David, for joining us.
Thank you.
And thank you for joining me throughout the day. We're coming to you live from the RatesEvolved conference brought to you by Viable Markets. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.